And we've seen this before. This is not new. It'll, recover eventually, but this is the nature of crypto unregulated. And so my argument is this really should get us focused on policy. Right after the midterms, I'm hoping for policy on stable coins and then into other assets as well, NFTs, that kind of thing. We're at the nascent stage, but the volatility is because we don't have the institutional bid.
The stock market will fall further. In this interview, Kevin O'Leary will give his take on the current economy. Farming oil, geopolitics, interest rates, the Federal Reserve, monetary supply, and more will continue to be drags on the economy, thereby inflicting more pain on the stock market. Not a lot of people know, but we have a fertilizer shortage. With less fertilizer, that will mean less crops, which then spills over into September being the harvest season. Of course, different crops are harvested at different times of the year, but planting season to harvest, from when fertilizer prices dramatically increase, will be from September to December. Stock prices currently do not reflect the fertilizer shortage. This is bad, again because less fertilizer means less crop yield, which makes inflation worse. The inflation the economy will see is the price of food going up. Let's hear from Kevin O'Leary on his take on the current economy.
No, I'm actually averaging down on a couple of the big market cap names. I mean, one of the challenges, and this is proof now for why we need legislation and policy on crypto, because if we had institutional capital coming in under the market, if they had allocated 50 basis points or 100 basis points to, let's say, Ethereum or Bitcoin, Solana, Polygon, whatever, you would have had a bid. Instead, because we're basically under-owned by institutions, we have tremendous volatility. And we've seen this before. This is not new. It'll, recover eventually, but this is the nature of crypto unregulated. And so my argument is this really should get us focused on policy. Right after the midterms, I'm hoping for policy on stable coins and then into other assets as well, NFTs, that kind of thing. We're at the nascent stage, but the volatility is because we don't have the institutional bid.
The first cryptocurrency crash was most likely caused by the UST falling from the $1 price. The second crash was primarily macroeconomics. The consumer price index in May set inflation at 8.6%. This surprised all markets, with the Dow Jones Industrial Average dropping by 900 points, entering into the bear market. On Monday, June 13th, the price of Bitcoin plummeted from $27,000 to $22,000. Bitcoin is now trading at an all-time low of $20,000. Let's hear more of what Kevin O'Leary has to say about it.
Here's what I think is going to happen. They're going to pick one thing. They're going to pick one thing and put policy on that. It's going to be stablecoin to start. And the policy there is going to be pretty clear. All the bills say the same thing. They want total transparency. They want an audit every 30 days. They want no duration more than 12 months on any asset holding up the coin. So that means T-bills on average are going to be 7-8 month duration and US dollars backing it. And that's the same kind of rule you're going to find in a Schwab money market or a Fidelity money market or any money market fund, with the benefit of all of these systems, once you put policy in place, having the ability to be a payment system. So I would love to see this happen. And the reason I think you'll get policymakers on both sides of the aisle is backing this one thing after the midterm elections is this guarantee. Well, the great news about the crypto economy and even positions like Bitcoin or Ethereum, these are decentralized holdings. It's not just the American investor exposed here. Bitcoin is all around the world. And it's only 880 billion before the correction, which, as you rightly pointed out, is a big nothing burger. And so that's nothing. I mean, even all of crypto under 2 trillion is still nothing in financial services. So there's so much upside to this sector. When we do get policy, when we get institutional investors and sovereign wealth involved, then you'll start to see real assets. But, if Bitcoin went down another 20%, it wouldn't really matter because it's spread around everywhere. And most of the holdings are not institutional. For all the excitement about Bitcoin, no institutions own it yet. And that's the decision you have to make at a time like this when you're an investor. I mean, this is an opportunity to say to myself or anybody,
a drop in Bitcoin markets may have you worried. Use it as a wake-up call to reconsider why you're in the market in the first place and what are the opportunities that come with the risks. For one thing, Bitcoin has recovered strongly after its previous sharp fall, but it has become a serious existential problem, especially if many countries place a ban on its use, and perhaps even the ability to own it. If faced, there is no guarantee that it will recover again, and it's kind of a real risk that can destroy or make a profit when the reality isn't as harsh as expected.
Can't pick the bottom. It's impossible. You have no idea when it's going to happen. But if you're staying long the category, you need diversification. I have so many different positions on right now, and they're all over the map. Now, come year end, what'll happen, because this is a year where we're going to be looking at tax returns on all crypto trading and income, there'll be a lot of maneuvering on the projects that did not recover to take them as tax losses versus the ones that did. And that's going to be the nimbleness of trading.
At the market level, the presence of leverage increases the volatility of assets because its price is less predictable. Increased volatility harms Bitcoin's capacity to function as a store of value. Individually, leverage raises risk and increases the possibility that an investment may become absolutely worthless.
I don't use leverage on crypto because I've seen volatility like this in the past. There are certain assets where I might put leverage on, but it won't be in crypto. I mean, when you see volatility of 50% on an 11-month basis, which we're seeing in Bitcoin, 60%, 20% days on Ethereum, you can't afford to put leverage on that. But people will learn their lessons. This is a good thing in the sense that
companies are worried about a recession, and many in the crypto industry are prepared for a crypto winter. Coinbase is cutting off 18% of its staff, or around 1,100 individuals, according to an email issued to employees Tuesday morning. CEO Brian Armstrong highlighted fears about an impending recession and claimed the firm developed too rapidly during a bull market.
No, I wouldn't say that. There's two categories of crypto companies, ones that use leverage and ones that don't. Now, when you have a very volatile asset and you have the fortitude, I'm going to use that word, to use leverage to enhance your returns, you also run the downside risk of what happens when there's a major correction, as is occurring right now.